is Lizaki from One Side Finance. In this video, I want to explain to you how is interest calculated on my home loan. We get this a lot, okay? So the first thing you need to know is this is the formula that you have to remember. So basically, interest is calculated daily based on the loan balance minus offset balance if you have an offset account times the interest rate divided by 365. Even on the leap year, it's still divided by 365. That will give you the daily interest. All right. So then, what the bank does is they will calculate day one. This is the interest. Day two, this is the interest. And then at the end of the month, they will add it up and they will charge you the interest monthly. Now, I'm going to give you an example. If the loan balance is 500,000, for example, and the offset balance is 10,000, so the bank will calculate the interest based on 490,000 times the rate, and just say, assuming we'll put the rate of 6.5 in this example, divided by 365. So in this example, the daily interest is 87.26. Okay, so obviously every day your loan balance could be different, but just for this example's sake so that it's easier, if that month has 31 days times 31 days, for that whole month the interest will be 2705.07. Remember, each month has different number of days. So if you are in say March, it will be based on February. So February have less days. If you are in April, it will be based on March. So then your April interest will be higher because it's based on 31 days of March. Okay? So that will answer your question why your interest is more when your balance is less. Okay? Now, when you pay principal and an interest, it's like this. Sorry, it's supposed to be not like that, but it's like this, like that. So in the beginning, when you just started the home loan, you feel like, oh, my loan doesn't go down much. This is because in this example, for example, the principal and interest repayment is 3161 per month, okay? And that consists of principal and interest. When you get a home loan, you'll get a loan statement. In your loan statement, you will say the date, the transaction description, debit, credit, and balance. So in this case, for example, initial balance is 500,000. The repayment that you make, you basically will transfer this much, or the direct debit to the bank will take this out as a repayment. And then, so when the balance is minus 500, and then you make the repayment, the balance will go up first. So go down to 496,389. Okay, but then the interest then get charged, which is the full month, 2705.07. Okay, so that will make the balance 499,544. Now, the difference between this balance and that balance is how much your principal is reduced. So in this case, it's 455.93. So the next month, then the interest will be a bit less because it's based on this balance, not the 500. Okay? So if you ask me, my repayment is this, how much principal has gone down? The answer is this. Okay? So as you build up your offset account, you will still make the same repayment, but the interest that the bank charge is less, then more of your repayments will go towards your principal, and then you can reduce your home loan much faster. I hope this helps to answer the question, how is interest calculated on my home loan? If you have any question, feel free to contact us. Thank you.